Compliance and advice, R&D incentives and export grants, business systems and buy-sell negotiations. But Luke is more than just another suit. With a developer for his brother and a top drawer full of RPG maps from the 90s, he has a passion for the industry. Luke.
Thank you. Thanks everyone for having me. I'm here today to talk about Kickstarter and the implications for income tax and a number of other Australian tax systems. There's a quick snapshot of all the different things that LDB does, so feel free to get a hold of me along the way at any time if you've got any questions, but I've only got 10 minutes, so I'll power straight into it. So there's a couple of different angles that Kickstarter is starting to interact in terms of the taxation system here in Australia. The ATO have started to take a little bit more notice of late, particularly as they're seeing some of their more successful projects picking up a lot more money. And that's meaning that they're starting to put some announcements out as to how to treat the proceeds in particular. There's a couple of areas that we'll talk about today. Well, three main areas. One is the concept of whether you're in a business versus a hobby, which I think impacts a lot of people in this room perhaps as they're starting to develop. They're not quite sure whether there's a commercial operation there and they're forming it up from the ground. The second is the income tax treatment, particularly where you're successful and you're able to receive quite a bit of money. And third is GST, which is a bit of a grey area. It's an area that a lot of people struggle with, particularly given that there's some international implications. One thing I would say is that it's important to try and have this conversation early, because it's difficult to come to the table and talk about it when you've had a very successful Kickstarter. Much the same as in the video games industry, if someone comes to me after they've launched a game on the iStore or Apple Store and they make $1 million, there's very little I can do with the tax outcome once it's happened. Me or any accountant for that matter. So let's have a look at how the ATO views Kickstarter. This is based on some commentary that they've put out on the web, as well as some findings that we've seen behind the scenes in doing private binding rulings. So the ATO basically identifies the three counterparties that are involved in a Kickstarter project. I'm sure none of this is news to anyone at all. The initiator or the promoter, who's the person who's raising the funds, ideally everyone in this room. The organisation that's providing the platform, in this case Kickstarter or Indiegogo or any of the various online crowdfunding platforms. And then the individuals that pledge money for the finished product. So the ATO regards this particular source of crowdfunding as rewards-based crowdfunding. That is something that someone is going to contribute funds to a campaign operator or a promoter, and they're going to receive in return a physical copy of the game, generally. In the case of digital, even a soft copy of the game. So that's that side of things. I think largely that's all fairly self-explanatory. So the first area that is of interest to a lot of people, and I think is worth exploring before we get into the other two sides of it, is this concept of carrying on a business versus a hobby. So a hobby is essentially an area where you can still generate money, and a lot of Kickstarters will continue to generate money. There's not actually a profit-making intent there. The idea is that you wouldn't necessarily go into, say you're selling lemonade on the street corner, you wouldn't necessarily do it to generate a profit. Oftentimes you're covering costs and it's a social element or something along those lines, or the profit may be so marginal as to be really not worth the investment of time. So certainly when you're starting out with your campaign, it's worth figuring out how serious you are. Is there intention to make a profit? So are you building in sufficient margin into your product and your campaign to ensure that you've got some money to take home to pay the rent? Do you have a formal business plan, and have you put some budgets together as to how you're going to spend the funds that you raise? And once that the money is raised and the business is operational, how are you going to get it out there and market it and really push it so that you're available to a wider audience? In the case of a lot of Kickstarter campaigns, it's talking about publishing and that next step after you've distributed your physical copies of the Kickstarter campaign.
Look, quick question. When it says making a profit,
yep,
does that include being able to factor in a margin for unforeseen costs, or is it exactly you have to spend exactly what you've got on costs already?
Good question. Look, any serious business would be building in a safety net,
Yeah.
a buffer, if that makes sense. So,
But can you do that as a hobby?
well, it's an interesting one, and the area is grey. There's not necessarily a black and white position here. It's a weighting of factors towards particular areas. So on one hand, for a lot of people, they get into, I've got a good example as a jeweller who spends an inordinate amount of time invested in designing jewellery, buying the components, the various bits and pieces, and ultimately then sells it on to various people that will buy it. To do that, there's a small amount of marketing where she's to shift the product, but largely, if you look at the amount of time that she invests, like it's equivalent to a full-time job, she makes literally no money out of it. So she has enough money there from the sale of her jewellery to cover things that might happen over time, but yeah, there's not really a huge margin as such. So I've got some examples up here. Adam's looking to make a new tabletop game. The purpose of making this game is so he can join with his friends on weekends, and he'll sell copies of the game should it become popular. He doesn't really have any other plans in place. In that regard, the ATO would generally say he's not running a business. He's not really there to make a profit. He may incidentally make a profit, but that's really not what he's setting out to do. To be contrasted to Amy, who is looking to make a new tabletop game. She set out detailed plans as how she's going to advertise it. She's got some budgets there, setting out how the campaign will go should it reach certain levels, and long-term plans for sequels should it become successful. She's not sure whether it's going to succeed. That's an element of business risk that you can't ever address up front. But she's hoping this will make some money, and that would, ideally stand in her shoes as a full-time job. But they're really two basic examples, and contrast the two positions essentially. So, income tax. We're talking about income tax in the context of the funds that are raised, and the big issue that for a lot of people that are running campaigns is that you'll often receive a good chunk of that money, particularly if it's a successful campaign, very early in the piece. You may have incurred some costs, some preliminary costs to get it to a stage where you can launch a successful campaign, but generally with the sales pipeline, most of the income is coming in up front. And it creates a bit of a mismatch. That causes a problem, particularly in the circumstance where you raise the funds all in, say, June, and then a lot of your production costs are occurring in a later financial year. It can mean that you're paying tax on it in year one, and then you've got all these deductions that come in later, too late. So we've done some research on this for a number of clients doing successful video game campaigns. And we've also gone through the process of reaching out to the ATO through a private binding ruling application process to clarify the treatment. And the findings are essentially that it mirrors a case, a very popular tax law case I'm sure everyone's aware of, Arthur Murray, New South Wales versus the Federal Commissioner of Taxation, back in 1965. And the long and the short of it is this case was about dance tuition at a particular studio, and they prepaid their dance classes up front by the hour. And what happened was that the ATO then challenged and said, well, you've received all this money up front, you should be reporting that in your income tax return. They took it to court and they found that no, what instead they will do is they will apply that income when the dance lessons actually occur. And the similar principle applies in the case of Kickstarter, that essentially it's the delivery of the actual goods or services in some instances to the backers is when the income is going to be received. And that's really important because it means that particularly in the space we're in, the production costs are going to form the large majority of the expenditure there. There is a tax ruling on it that also talks about very similar things. I've put it up there, TR 98.1, and it's really talking about a recoverable debt, and that is essentially when your end user is receiving, or end participant is receiving the physical products. All these slides will be available later on the website, so I've got some hard copies there, but you'll be able to get a soft copy as well. So we've got a couple of practical examples. Say Jake is carrying on a business, he's determined that that's what's happening, and he started a Kickstarter campaign to develop a new tabletop game, The Adventures of the Dwarf King and His Accountant. Jake's aiming for $50,000 and he's going to spend $30,000 on art and $20,000 on production. He starts his campaign in the 2017 financial year, raises all of that money, and then it rolls over and he starts expending that money in July. So that, as I was referring to earlier, there's that crossover of financial years, which can be really important. He spends that first year working on art and developing the title. Nothing was provided to the backers, as is the case in many Kickstarter campaigns. And then what happens is no income is recorded. He may well have expenditure there that's classed as a deduction. He continues developing the second year, and then he actually finishes the game, and he's able to send out 1,000 of the 4,000 copies of product that he's going to send, and therefore, in theory, a quarter of those funds are recognised as income in that year. The following year, he sends out the balance, and then the balance of income is recognised. So, relatively straightforward example, and hopefully makes it clear the sort of treatment that's going to be there. I think this is a very simplified example, so it's worth sort of discussing it once you get a little bit further into your campaign. Okay, GST, the third one. The question of GST is an interesting one. It's really going to come down to whether you are essentially running an enterprise and your turnover is going to be more than $75,000 in a 12-month period. It's important to note that just because you are not registered doesn't mean you don't have to charge GST. If you meet the criteria to register for GST, it's a mandatory test, then GST will still apply. So under our rewards-based model of Kickstarter, the person who's providing the goods at a later period, they're the one that registers, so the promoter. Quick question?
Yeah, sorry, is that 75,000 specifically related to Australian backers, or is that every bit of money you're
Everywhere. Yep. And there needs to be a taxable supply made in Australia. So often in the case of developers here, they'll actually be selling the good from Australia overseas. In that instance, GST would need to be collected on the Kickstarter campaign proceeds. However, that's only to the extent that the backers themselves are located here in Australia. So if the backers are located elsewhere, then you will not have to charge GST because it's essentially classed as an export. So it's important to understand that treatment and how that will apply in the context of a campaign, because the GST registration will need to occur very quickly and will also mean that your obligation to pass that GST on to the ATO will happen generally within a 3-month period. It's usually quarterly or annual registration. So I've left the question slide there, but I'll call it at that because I'm run out of time, and we'll have questions at the end. We can go in a bit more detail.
Yeah, sure.